Good afternoon. Welcome to Options Center. Happy Saturday, everyone. It's 9/23/23. It is a beautiful Saturday afternoon in Michigan here. Thanks for joining. We're going to go through a lot of things. This is going to be a lengthy video. The portions that are most important, it's all important because we're giving a big picture all the way down to the small picture point of view. I'm going to show you two pathways that I think the market could go into next week. Everybody knows I'm bearish, but we're looking at two paths to the downside that price action could take. We're going to look at Apple and Meta and tell you why we're going to be pretty aggressive on those, because they're probably going to take a little bit of lead. The other stocks may go down more, but a little bit more. But I think the lead is going to be taken from Meta and Apple. If the market's going to go down, then I think these guys are going to lead it because they have these beautiful setups to the downside. So if you're new here, go down to that bottom right-hand corner, hit that Options Center logo, and subscribe. Don't forget to like the video. If you want to help out in any other way, go down to the description below. There's plenty of ways to do it, but liking the video would be wonderful. It gets the algorithms moving. We are going to start going live after we get to 500 subscribers. So that is a short-term goal. We want to get to 500 subscribers so we can go live and start to make some videos live, maybe at market open or throughout the midday chop, sort of give a midday update kind of thing. Those are some of the ideas I'm thinking of. And if you want, put a comment in on what you would like to see. But other than that, we're going to jump onto it. We're going to move onto SPX on the monthly time frame. And then on the daily, we'll switch through multiple ETFs. We'll go through ES, SPY, and SPX. And then towards the end is when we'll go through Meta and Apple and show you the setups we have there. All right, so on this monthly time frame at SPX, you see the 1929 crash. We had a top with that trend line, and we had a top again. We also had some confluence from multiple channels. So we do think this is going to be a pretty aggressive, a higher degree correction, and we're starting to get that. So as of Friday, we came right to that 8 EMA. We'll keep that in mind. A lot of times price action either spikes through or narrowly misses a moving average. It closed right on this 8 EMA for the monthly time frame, and underneath last month's no close yet. Sorry, we're still in the month of September. We're going to see, but we closed last week on top of this for the monthly candle. We're starting to break underneath last month. That's bearish. That's our tweezer top here, and that we're breaking below that. So we're getting follow through. We need to close below in order for confirmation. All right, but the 8 EMA on all time frames is our trend indicator, and right now we're still technically trending. You could say to the upside, we're above the 8 EMA, but just to be honest, after we came down below it, we're going sideways. We're going sideways, and the 20 simple is showing that as well. And the 50 is coming up to the 20. So we're going sideways at this point. Enough said on the monthly time frame. We are looking for much lower prices, probably the 200 month, the lower channel here, whether it's 2,300, could be 2,500. We'll see as we get closer. Let's go to the weekly time frame. If we throw on this weekly board, you'll notice we've shown this in the past videos. We have somewhat of a bull flag that we're representing here. We have a channel, okay? And at our minimum, retracement, we think we're going to hit the bottom of this channel. And sure, you know, depending on what the indicators say and what we're looking at, we can make new highs at that point. So at our minimum, what I have labeled here is our measured move. This is wave A, wave B, and this is where C is equal to the distance of A. Okay, so that would be our target. Our target is somewhere around 3,300 or so. That would be our very minimum situation where we have maybe a WXY or ABC. I like to keep it simple whenever I can. So an ABC correction, just a 3-wave move before heading higher. Minimum. Okay, we could look at, let's just throw on one indicator here on the weekly time frame, just so we can see what's going on with the indicators. We had our bear cross. We had a sell signal and bearish divergence, and we're starting to weaken on the RSI. We're not oversold. We had a bear cross on the slow stow, and the RSI stochastic is bearish, still in bearish territory. So we're still just we're looking to the downside. There's nothing positive about these indicators. So let's go ahead and go to the daily time frame, and then we'll check out some of the indicators. And daily trend is our friend. Now, what I want to point out specifically for the SPX is not only did we come in that 8 EMA on the monthly time frame, we also came into support. So you notice the support here, former high, and then we used it as support in this area too. So we're at support at this point. Do we get a bounce off of here, or do we just keep going lower? We don't show any sign of reversing yet. You can call this I think the ES shows a little bit better, but an inverted hammer perhaps. So yes, we could get our bounce here. Maybe into Monday. We do have some time association with Monday, so maybe Monday we kind of spike through. Who knows? Maybe we come all the way down to the trend line and then regain this zone. So we'd have some sort of maybe doji candle, some sort of tail candle that will indicate that we have maybe 1 or 2 days of consolidation or retracement. So that's kind of what I'm looking at from the daily point of view, but ultimately just looking for perhaps some sort of bounce here and then consolidation before heading lower. Our target again is around this, first of all, to backtest this ascending triangle. I'll back out a little bit. We had an ascending triangle that we broke out of. We want to backtest that. That's what this green area is. That's our chop zone. So we want to backtest it, probably get a reaction off the top of it, but our targets are somewhere in this zone. You have these consolidation zones. Consolidation zone. They go back further. I show them in many videos. So we're probably going to get into this consolidation zone, chop a little bit, maybe even retrace back up to backtest the trend line. And I'm assuming there's a lot of assumptions that we break the trend line. Okay. And that would be a good time to bring up our Elliott wave pattern, because we're in a 1-2 situation, and 1-2, 1-2, but we don't have any resolution here. There's not 5 waves. So anybody that's a bull, they're looking at this 3-2 retracement from this supposed wave 3, and we'll probably get a few buyers. Like I said, this is a good bounce area for that 382, and also our former 62% retracement from all-time highs. And that's going to act as some sort of reaction zone. So we might get our bounce around here because of those, but we don't see any resolution. You need 5 waves in here for this to be some sort of ABC. Now, if you can count this as a WXY, you can get complicated, but fact is we have 3 waves here. We want to see 5. Okay. This isn't a double zigzag for WXY. I don't see that. I know that wave 4s get complicated, so nothing's 100%, but we're looking at this zone for at least a bounce where we can get this wave 4 and then a wave 5. But our target for this wave 3, I think we have so much more room to run if we're correct in this wave count. Okay, so from the top of wave 1 to the bottom, it's typical to get a wave 3 that is a 162% extension. It's very typical for the wave 3 to come down to about this zone, which is exactly in this chop zone that I was talking about, around the 4100 area. It doesn't have to get to there. It can be the 127. We do have this 50% retracement here as well, which is the top of this zone. So that's where you want to take a lot of your profit. But a lot of time when price is accelerating like this, it likes to spike through. Okay. So our target for wave 3 has plenty of room to run. We're at 4,300. We're looking for 200 more points to the downside. So even if we get a bounce in this area, it's probably going to be something that's very, very meager, like this little green candle right here. Maybe a little green and then head lower. That's what we're looking for. Now, the wave 3 is the most impulsive wave of this move. So it should be pretty relentless if we have our count right. Okay, so that's where we're holding, and we did put on a little bit of call protection going to this zone into Monday. But, I mean, we're 90% short. We have a lot of short positions. Okay, now let's go over to the SPY, and then we'll do ES, just so we can get different perspectives. I chart all of these so I can get the perspective from multiple points. It helps to trade. It has helped me to trade. Let's put on our daily time frame. Now, again, we're talking about these chop zones, right? That's in the turquoise. That's what I highlighted here, the chop zone. That's where our targets are, is into this chop zone. Okay, so what's happening right now? We have this chop zone here. We got a reaction off the bottom, but couldn't hold. We had a little bounce, and now we're continuing to break down through this support area here. We'll see if this is actually some sort of inverted hammer or if it just is continuation to the downside. We did get a reaction off here. We're breaking down underneath support here. And then we have a gap area in between. I see this trend line. It's not a true trend line in my opinion, because there's two touches. So it's a rising pivot. There's two touches. We easily could get a reaction off of there and bounce. So I don't want to underestimate it, but I know where our target is, and I know where we're going with price action, so we should rip right through it. Not much should hold us at this point. If we throw on a couple indicators, you can see we're getting into a little bit oversold on RSI. But, you know, this, in order for me to go bullish on the market, I need to see some bullish divergence on the RSI on the daily time frame. This might cause a bounce, but price should continue to the downside. Same thing with all of these indicators. And the important part is that we're making new lows on the momentum. So momentum's not showing any weakness, or I should say strength, as opposed to this week. It's getting weaker. And so we're going to follow that trend. Let's go ahead and look at it from the point of view of ES. And maybe we do get this bounce, and that will be our alternative. I'll show you that on a 65-minute, so stick around for a little bit. I'll show you on the 65-minute in just a couple minutes here on what I think could happen, be it our alternative situation. So that's it. That's what I was talking about, inverted hammer. So possibly we could start getting some sort of bounce from here. But then I'll show you on the 65 what I think would be happening if we started to get a larger bounce. I can remove this. That was our expiration gap. We have a trend line right underneath us, so we got to be careful of the price action coming into this trend line. We start breaking the trend line, we're heading down lower. That's the chop zone I was talking about. So the point of control, the 41.54 for the daily time frame. So that's our end result here just for wave 3. A 1, 2, wave 3 into this point of control. We still have 4 and 5 to move further. All right, before we get a significant bounce. That's our primary look. So let's go ahead and go to SPY so we can translate this on price. We'll move down to the 65 minute. And we'll give you just a point of view from, you know, it would be a good idea to, I'll start with SPX and then we'll go to SPY, because I do want to show this point of view on the 65 of what I was mapping out. You know, that's why we do technical analysis, is to map out what visually what we think the market is doing. So what I did here, we have our left shoulder, head, right shoulder, and we have our neckline that we're breaking down from. Okay, we're breaking down from the neckline. We back tested, couldn't get it back above it. In our measured move, should this play out, is this dotted line here. All I did was take the length. Sorry. All I did was take the length of this neckline to head, drew a line, and I'm moving it to where the breakdown point is. So we're looking at, again, right into this consolidation zone. More towards the bottom of it, but this is just a measured move. This is traditional technical analysis where the head and shoulder measured move should come to. And that's around that 40.88 in this zone between 40.88 and 41.63. You saw the other target was at about 4,100. So again, this is the zone we're looking for. Okay, so that's why I want to show you back in SPX, and then we'll continue on with SPY, give you another point of view. And then we'll go over to the Elliott wave. And don't forget to like the video, you guys. So we had this triangle. We broke down from the triangle and we're continuing to the downside. Now, a lot of times when you break down from formations or patterns, you want to back test. So more on that. That would be our alternative situation, is if we somehow get a bounce, we break back above the neckline and we start looking more bullish in a sense. We broke down from the neck. We broke down from the triangle. Now, look at this. We have a triangle here. It's more of an ascending triangle, but it's still a triangle. Never even looked back. Just kept moving forward. We had a triangle here. We back tested the triangle and continued higher. Price action can do either one, so we have to keep that in mind. If you take anything out of this video for the very near-term situation, we're asking two questions. Are we going to back test, or are we just going to continue to flush? All right, so, and my primary thoughts, and we'll go over to the Elliott wave. My primary thoughts is that we continue to flush with maybe a little bounce. And the reason why I say that is because we're in wave 3 of 1. So we're in a powerful situation where we should be heading down pretty rapid relatively rapid down to the end of wave 3, which would be around this 50% retracement from all-time highs, the 162% extension. So I'll dig into this count a little bit more. We had our main wave 1, our wave 2, 3-way move up for wave 2. Now another 1 in yellow. It's another 1 and 2 back up for a lesser degree. And now this is where it's going to start getting a little bit more. I think I'm trying to be a little bit more conservative to where our wave 1 is down here, but really we can even go another degree and move this up. So we have a 1, 2, 1, 2, 3, 4, and possibly the end of 5, which would just be wave 3 just now happening. You know, we could have put wave 3 up another degree there, but possibly wave 3 could be ending pretty soon here. And our target for the wave 3, we're right at the 127. It could end right here with just a very small wave 5. That would be 1, 2, 3, 4, 5. It's just about the same length as just wave 1. So there's a good chance that it's coming into this territory, 382. Maybe we get a slight gap tomorrow, and then we fill up the gap plus bounce. All right. So we're gonna definitely, if we gap down, we're definitely going to take some profit. But this wave 4 should be somewhere, and I have this drawn out to where we make it to the 162. I'll have to adjust it if we start to move up from there. So I have to go to, excuse me, I have that at the wrong, that would have gave us too big of a bounce there. Okay, now that's a little bit better. If we do start to bounce right away, then I'll adjust this a little bit later. But for now, I'm going to assume that we come down to our target. That would mean that our wave 3, 4, and 5. So our wave 3 should come down here. Sorry. Our wave 3 should come down to this 1618, 162%. Let me make sure that I have the right. Yep. So for our wave 1, let me move that up. If we're putting our degree up here, then our wave 1, top of wave 1, to the bottom of wave 1, to the top of wave 2 here. See, I'm glad I did this because I had it in the wrong spot, and we could have already hit our wave 3, and that's what it looks like. Okay. So that would mean we're done with this wave 3 here. That goes underneath the turquoise. We had our wave 4. And now we're looking at wave 5 completing somewhere around here. Okay, so I don't even need these retracements necessarily yet. But that would give us our wave 3. If it's over, it could continue. Wave 5 can continue because look at wave 1. Our wave 1 is much longer. We could spike down here and start to retrace. And that would mean we'd have to move our retrace. Our retracement would be a little bit bigger bounce. So the top of wave 2 would be right there in the yellow. And wherever it ends, wherever this price action ends, now we're looking at the 23.6 to 38.2 zone for a retracement. Okay, sorry that this took so long. But when this ends, the turquoise is probably going to end really soon here. We'll start to get the yellow wave 4 bounce. And it's somewhere right here. Now, what's the alternative? The alternative is this other situation here. this dotted line going up, and that is telling us that we're going to get another minor degree wave 1 into 2. So in that case, which I don't think that's going to be the case, but we'll be able to tell off the bounce. A 1 2 1 2 1 2, and then we should head much lower, but that's going to change all of our projections, because our projections will be much lower. Okay, because this will be a much more rapid move. That would be much more bearish if we had that bigger bounce to back test this triangle. All right. Okay, so that is the ultimate thing that we're looking for, and I think we're going to be a little bit more bearish. I don't think we're going to come all the way back up here. Just leave it, don't erase it. Don't put all your eggs in one basket. And here's another reason why. Let's go ahead and go over to Apple. Now, Apple is just now, it's still at support, but it's showing some signs of breaking down. You see this pivot here? I know it's been oscillating around this pivot, but let's give you a daily point of view of that. Now, it could just be making a higher low right now, but this is the way I see it from the bearish standpoint. Okay, this is a higher time frame, and you have to respect the higher time frame much more. So we do have a possible tweezer bottom. So we'll have to watch price action. If Apple seems strong, then maybe it finally starts to retrace, and this is a complex correction. But from the bear point of view, and which will help out our situation where we think we just continue lower with measly little bounces, is that this 8 EMA, our trend indicator, price cannot stay above it. It is not staying above it. And we're rejecting off of it again. We actually broke above this pivot, but you notice it closed underneath that pivot again. We did here, and we started to move up and couldn't close below it before. Closed below it twice in a row. I think that's pretty bearish. So that 8 EMA is going to continue to head down. And what I think is happening, all these moving averages are moving sideways and starting to actually roll over, because it's starting to play with this price action, starting to roll over with 8 EMA leading. So that's the main thing I want to show on there. And so we are short Apple, and we are short Meta, and we're short Tesla and NVIDIA and all sorts of things. But Tesla, we're going to scale out of that pretty soon here. And here, same thing. Same thing in a sense. You see price action, we're getting ready for a big move. And if the market's going to be negative, we're not going to see Meta head to new all-time highs. Price action, we had our initial wave down, just like we did in the SPX or SPY. We had our retracement, 3 waves. And now we're set up for a 1-2-1-2 setup. Price couldn't hold above this trend line, and it's wicking. It's starting. That's a really good reversal candle. Now we have to get confirmation, and even better confirmation would be if we gap down below the gap and get a island reversal. But we'll see what Meta does right away on Monday. It's got a 1-2-1-2 setup, and it really a 3 1 2 1 2 1 2 setup. Okay, and now we're going to start on wave 3, just like SPY, where we're getting to all these ones. It's a topping formation, and then you get price action, a break. So if this is a reversal candle, you should see a pretty nasty engulfing candle coming up soon. Probably 3, 4, 5, who knows, red days in a row. Could be 6. So that's the risk reward that we're going to take with Meta. Okay, we want to see some, it's going to be much more steep than this move. So wave 3 down, 3 of 3 of 3. And this thing's going to move. Okay. And now, do we have a target? I think I may have put it on there so far. Yeah. So let's see. Well, we do have a target for the larger degree wave 1 here to 2. And 3 would be down here at the 220 area. So all of this should be pretty rapid in the next few weeks. Next few weeks, we should see this drop significantly, you know, with some pauses in between, but this is Meta. You see how it trended up. Let's go back and see how it trended up. Do you see much pause there? A few, but you can get 10, 11 days in a row. You know, 5 at a time, 6 at a time, and then a little pause, and then 4 more, and then... So you see this thing can move. It can move down here pretty quick, and that would bring us right into the gap area. Okay, and last but not least, we're not going to hold you up anymore. Let's go ahead and put the VIX. Sorry, that's the water running, the hose. It's making a pretty annoying squeal. Okay, so on the VIX, we got back into the channel. We got over resistance. We're coming into that 200-day moving average. That is going to be our challenge coming up here. We didn't even test it yet. Okay, let trend is our friend. We didn't even test it yet. We're not there. So we still could get our spike into Monday. And in the price action on Monday, a little bit more move to the upside for the VIX. Possibly even spike to resistance. And that would prove that SPX, SPY, ES has just a little bit more to go before any sort of bounce. If this has trouble at the 200, if it just gets above the 200 and stays, then you know that price is falling a lot faster. And, you know, we tested it once already. So we'll see. We'll see what happens. But make sure you scale down on your trades if we're getting into these resistance zones for the VIX, and then for SPY and whatnot. I mean, check this out. So 1, 2, 3, 4. It has a 5-wave move up here, but this may prove to be just a wave 1. You know, we already have a move here down for a possible 1, 2. Maybe we get wave 3, 4, 5. It looks more bullish. We have a high, a higher low, another high, a higher low. So it looks like we're getting ready to spring higher, and that should reflect on the bearish move in SPY. All right, so you possibly have a 1, 2, 1, 2 setup to continue this move higher. All right, that's all, you guys. I hope this helps. Don't forget to like the video. We can go through a lot more indicators and stuff tomorrow. Maybe I'll just show you some indicators and show you that volume shelf. We're in between volume shelves. We can go through volume again. I'll put a video on how to use volume to trade. All right. Thanks for joining us here, Options Center. Have a wonderful day. Enjoy your weekend.